Hi, and welcome to this week's Market Insights, where we break down the key events shaping the financial markets. Now, volatility remains high as traders react to ongoing tariff updates, geopolitical issues, and economic data. With uncertainties around these events, the markets, I think it's fair to say, are on edge. So, we start this week with Canada's inflation report, which could have a major impact on the Canadian dollar. Last week, the Bank of Canada cut interest rates by 25 basis points as expected. However, Governor Tiff Macklem warned that inflation remains uncertain due to those trade tensions with the US. Now, both businesses and consumers expect prices to rise, which adds, of course, pressure to the central bank. In January, Canada's inflation rate ticked up to 1.9%, meeting expectations, but it was above the previous month's 1.8% figure. This caused high volatility in the CAD markets. On one hand, rising inflation reduces expectations of more rate cuts, supporting the Canadian dollar, but on the other hand, inflation also seems to remain below the Bank of Canada's 2% target. Now, will the market react the same way this time? Traders should be prepared for potential price swings based on how that report comes out. Okay, next up is the Fed interest rate decision. So Canada's inflation report on Tuesday, and on Wednesday this week, all eyes will be on the Federal Reserve's interest rate decision. Now, according to the CME Fed Watch tool, the Fed is expected to hold rates steady. However, the real focus will be on Fed Chairman Jerome Powell's comments during the press conference. Traders are going to be looking for the slightest of hints about future rate moves, with most expecting a cut sometime this year. But the key question remains, will it happen in May, June, or even later on this year? Another crucial release will be the FOMC economic projections, which provide estimates for inflation, unemployment, and economic growth. Now, these projections also include individual forecasts from each FOMC member, giving deeper insight into the Fed's outlook, and those will be poured over, there's no doubt about it. Now, back in January, the Fed also kept rates unchanged, strengthening the US dollar initially. However, without clear guidance on future rate cuts, the dollar soon lost momentum. Will we see a similar reaction this time? Well, stay tuned and keep your eyes and ears open for those all-important figures. Okay, now moving to the UK, and the Bank of England will announce its interest rate decision on Thursday at 3 p.m. GMT +3. Now, with inflation still running high, the Bank of England is expected to keep rates at 4.5%. However, traders will closely analyse the Monetary Policy Committee, or MPC, votes to gauge whether the central bank is leaning towards easing in the future. The UK's latest inflation data showed CPI at 3% for January. That was up from 2.5% in December, and that is quite a long way, of course, above the Bank of England's 2% target. This persistent inflation has fueled concerns that the Bank of England may need to keep rates higher for longer. Now, for traders, this could mean positive movement for the British pound, of course, but as always, the details will be just as important as the decision itself. We're talking about reading between the lines or reading the background information. So keep your eye out for those figures, but also look at the comments that are attached with them. Now, beyond economic events, this week we'll also see some major companies releasing their earnings reports. As mentioned before, of course, earnings reports can bring unexpected results that lead to sharp price movements. Whether numbers exceed or miss expectations, traders should be ready for some potential volatility. So make sure you've got your risk management techniques in place. Now, that wraps up this week's Market Insights. Remember, economic and geopolitical events can trigger sudden volatility, so staying informed is key. For real-time updates, check out the news and analysis section on our website. Thanks for watching, and good luck with your trading in the week ahead. Bye for now.